thank you. Thanks for the invitation. I'm sorry I couldn't be out in Iowa. That would certainly be a much preferable situation. It's been a tough couple of months out here in the New York metro area. I am here to talk about the recent developments in the global pork market and how they might impact the outlook for the U.S. swine industry. Some of you might be familiar with Rabobank. For those of you that aren't, we are the largest food and agricultural bank in the world, headquartered in the Netherlands, but we have offices all over the United States, and we are able to work with many of the key players in our U.S. pork industry. My job at Rabo is to focus on the pork and poultry industry, not only in the U.S., but in Mexico and Canada. We have 13 other protein analysts around the world that focus on other geographies, and I've included some of their updates in my presentation today. But if we look back at the last year and how much we've kind of gone through here, it's been a really challenging year, obviously, from a lot of respects. If we look back in June of last year, we were obviously quite optimistic that we would be having a really sizable export year tied to the losses of pork production in Asia, not only in China, but throughout Southeast Asia. We were pretty concerned about the outlook for trade with Mexico and Canada, two of our closest trading partners, as we were working to ratify that USMCA program and looking at the outlook for prospects to expand free trade to Japan, for example. We were already facing a very challenging labor market tied to relatively low unemployment and needing to raise wages in a number of markets. And immigration issues were already kind of a front page headline concern. And now, obviously, we were looking at a much different situation with regard to the crop. We were, really delayed on planning last year, wet spring. A lot of people were concerned about feed costs for 2020. That obviously worked out a little better than expected. But we were also looking at the challenges brought to us in terms of alternative proteins and what that might mean. Now, many of these things, have changed, but many are still the same challenges that we've kind of been facing. I think if you look at what's happened in China, we're still looking at what that might mean for our export demand here over the relatively near term. Obviously, there's a lot of political tension between these two countries, and now with COVID impacting that, it's a very challenging situation to try to predict. We've seen improved growth in exports like Japan, and we've been able to ratify not only the USMCA, but a free trade agreement with Japan that really has brought better export demand to U.S. markets. Obviously, labor is still a challenge, a bottleneck now, not just because of unemployment, but because we really have COVID challenges. That will remain problematic for the balance of this year and likely many years as we continue to struggle to find workers for our plants. And if you think about kind of longer term, really the challenges that we see coming really have more to do with the weaker economic outlook as we look forward, and what impact that might have on exchange rates and trade policy and even consumption globally. And that's really at the core of our analysis as we look ahead. So when you think about kind of all of these kind of impacts and how that might influence our outlook going forward, it really kind of ties into a few buckets. Naturally, a lot of these are centered around coronavirus because it is so fresh, and it will have such a devastating impact. But really, if you think through kind of the longer term supply chain disruptions that we've seen globally and how that might impact the industry, not just in the U.S., but in other pork producing nations, and how that could affect competing protein supplies. We're going to look at really this domestic hog production outlook and how challenging that has become in light of some of these kind of more severe demand constraints. and how that's influenced kind of the overall agricultural markets. Finally, we're going to look at really these sharp declines that we're seeing and expected economic growth, at least over the short run, and how that impacts overall demand. There's clearly no shortage of issues that can impact and influence our outlook as we head into 2021. So it's no surprise that COVID has really sucked up a lot of the oxygen in the room when it comes to the outlook for animal protein. If we look around the world at kind of what we're seeing today, the good news is that with only a few exceptions, we're seeing better trends in most geographies, although countries like China, Australia, and Japan are seeing kind of a resurgence in new cases that has us somewhat concerned. If we think through kind of countries like Brazil and Mexico, even India, where they really didn't see the early impacts of COVID and are only now getting to that high peak in cases. Obviously there's a lot we don't know about how that's going to evolve. And then with the rising cases that we've seen just in the last week or so in the US, what does that mean? Is this a continuation of the first round, which I think most people do think, or is this kind of a second wave, or are we expecting to see another wave here later this year? Bottom line, there's a lot we don't know about kind of the evolution of COVID, and we don't know how long this is going to be with us. All we can say with certainty is that it's likely to be a very volatile market here in the short run, and there's a lot of ways this could go. So as we work through kind of what this means for the global pork industry and all of the different pieces of that chain, we're really focused on kind of the short-term disruption in supply chains and consumer markets. But we're also looking at kind of the longer economic implications of this for not only consumption, but overall kind of competitive markets, export markets, and thinking through kind of all of those long-term impacts. And from an industry standpoint, there's a number of longer-term kind of trends that were already underway that were really kind of accelerated through all of this, right? So if you think about online shopping or direct-to-consumer models that we're trying to sell, meat to consumers, those were all kind of brought forward very quickly. Other kind of trends like automation in plants and supply chain flexibility, these are all things that, were already being addressed, but now seem much more urgent given some of the disruption that the industry has seen. For the most part, these aren't new things, but they do add costs. And, whether it's higher wages in the near term, being in the pork industry, or higher freight or shorter supply chains, these are all things that could pressure margins for the industry and could make us in the US less competitive with our global markets in the long run. So if we look at on slide 8, the economic impacts of this disruption, they were obviously really severe. Even in countries where they got ahead of this and we didn't see big outbreaks like South Korea, unemployment rose to almost 4%, and GDP growth now is negative. You look at China, these numbers show 6%. I think most people would agree it's closer to 10% unemployment, and that's going to have severe impacts on overall consumption of protein, we think. Trading down, fewer kind of food service sales. Even in the US, where we had a big spike in jobless claims early on of close to 7 million, now we're down closer to 1.2, 1.5, I think, here today. I think that there is relatively limited visibility, I guess, on how quickly the economy and jobs can actually recover. On the next slide, our economics team is a bunch of really smart people all over the world that try to put together a comprehensive view on what the bank expects in terms of economic growth. And I think, even though their confidence in their near-term outlook is relatively limited, I'd say they're 100% confident that they expect slower growth in 2020. Of the nations that we see here, I think the two that are hardest hit, you can clearly see, are the Eurozone and the US. The Eurozone is expecting, over 5% drop in GDP growth, and the U.S. is just over 6. On a worldwide basis, it's closer to 3%. But what this tells us is that we're looking at a very tough 2020. But from our outlook, and what you can see here is obviously a stronger 2021. And obviously, there's a lot of factors that are playing into those estimates and that outlook. But it does give you some comfort that possibly we can get back to somewhat new normal in the year ahead. So, if you think through kind of what is slower economic growth, what does that mean? Well, if you look back at the last global financial crisis when we saw GDP growth contract around the world, we didn't really see overall protein volumes slow. We did see people trading down between proteins, maybe from beef to chicken, obviously a better demand for lower cost proteins, but overall volumes of protein actually did quite well. What we also saw in terms of winners and losers in protein were that companies that went into this with a strong balance sheet and low debt and relatively low cost, I think really outperformed. And it shouldn't be any different this time. What is different, in my view, is that, alliances and relationships are that much more important. If you think about, retail and how important those retail customers were, if you think about packers and how strong, I think you can really see how clearly in a protein in the U.S., but more broadly for the industry as it tries to make it through kind of this challenging economic environment. On slide 12, what you can see and you've seen and all experienced this, I think this disruption in slaughter this spring as multiple plants went down. Now we've really turned the corner. We've basically gotten above or back to what we see as normal operating rates. And we're expecting things to run really well here over the summer as we have a lot of hogs to work through. Probably around 5 to 6% ahead of year ago. And at that level, we should be able to work through some of that backlog. Clearly we've built up about a 3 million pig inventory. We'll know a lot more later today. But that backlog could be a little bit smaller than some people expect. From my standpoint, there's really two questions that I want to answered in order to have a better view on the rest of the year. One is, can these plants really sustain these kill levels? Labor has been a challenge. Whenever we've run plants this hard historically, we really run into huge labor issues and absenteeism. And then how quickly can we actually clean up this backlog of pigs? Because if you think through, how much we're already killing, it could be a little challenging, especially in that Southwest Minnesota, Northwest Iowa quadrant. If we look on the next slide and you look at consensus estimates for the June Hogs and Pigs report, you can see that expectations are relatively limited in terms of how many sows we took out. It aligns with the sow slaughter data that we've been seeing and the capacity constraints that we have there. The other big focus for me in today's report will be, that under 50-pound pig number. Obviously, if we did euthanize some of those small pigs, that number could obviously be much bigger in terms of the net change. The other number to watch is how many we have kind of waiting to get to market. And that all plays into the near-term outlook for pork supply. If you think through, how many pigs we did have on feed, I'm a little surprised, I guess, with how quickly we've brought these weights down. If you look on the right-hand side here, you can see we've had kind of a normal seasonal drop in average weights, still above year ago, but not nearly as high as they were, obviously, to start the month. That's pretty comforting if you think through, where we are. But in my mind, it could be a bit of a head fake in some regards. We have done a good job with maintenance diets. They have been successful. I do think there are a lot of hogs out there, based on what we know. And we probably will see that number in the 180 pound weight group a little higher than you might expect based on that weight number. So on the next slide, on slide 14, sow slaughter has been running obviously well ahead of a year ago, but we really have a constraint there. Clearly, there's a lot of pigs that are backed up in that market, and we generally can't kill a lot more than 70,000 head a day. So I do see inventories there not dropping maybe as much as some people might expect, but we could keep those sows open, right? And that could help alleviate some of that oversupply later in the year when we are expected to run up against capacity constraints. Sorry. If you look on the next slide and how we think about the packer and how these plants have held up through all of this, what we can see is that as packing capacity was stressed and labor issues became a big deal, meat prices went up and hog prices went down, and packer margins went up as a result, which on paper looks a lot like that slide on the left there. But what we also know is that capacity utilization matters. When you are running these plants well below normal stated capacity, obviously the efficiencies aren't there and margins really suffer. And in this case, it wasn't just lower harvest levels, it was the added cost of $6 masks when these plants were competing with other frontline workers for that PPE, with wage increases and performance bonuses that went into keeping that labor. Those are all big factors that went into that cost base. And at the same time, these plants were so tight on labor and so focused on getting meat on the shelf. The goal wasn't to trim and debone product. It was to get those animals harvested. So we really couldn't optimize these carcasses, and the conversion rates were quite low. If you look at the cutout and the product values through the spring, well, there was an initial drop as the meat had to find its way, right, from food service into the retail channel. You did, and that was definitely the case with bellies that you can see there. What you also see is that as people began to run out of meat, essentially they were worried and they began to stock up, and those prices really surged. I think some of that was also tied to that media hype, right, and how worried people were about running out of product, especially as some of those plants closed. We also saw, though, prices come down fairly quickly as some of those supply chain challenges clearly were worked through. I think some of the decline has been aided too by slightly weaker export sales, and I'll talk a bit about that in a minute. But I don't see any interruption in exports, just slightly weaker sales, especially on that carcass product. Well, if you look at the next slide, the exports are the big driver here. But what happens at retail and on the front page often has a lot to do with what consumers are looking for too. So clearly in the peak of this, when people were worried about shortages, that had a big impact on meat sales. But what it also shows you, is that what we talk about with consumers has maybe never been more important. On this point, I'd say that the industry really needs to double down on the work it does with consumers. I think, with all of these negative headlines and now attacks by these politicians and plant-based companies, it's going to be really critical for the industry to work with the consumers and kind of work on that trust, and make sure that they're aware that, that their pork supply is safe, there'll be plenty of it, and that our supply chains are solid. in many ways, I think the past few months has been a big learning experience that highlights, where we are as an industry and where we could focus. It's very clear to me that these consumers, many of them, and many politicians, are generally unaware of where their food comes from. And as an industry, we can't stop, I think, reinforcing how much we've done to bring safe and affordable food to their shelves. Um, on the next slide, and I've spent a lot of time talking through kind of the outlook in pork and hogs. It's not to say, though, that there weren't problems in the rest of the industry. We all know that the beef industry also struggled here, and it was a big issue. But poultry didn't go unscathed either, and I think that sometimes gets lost. They did lose, obviously, some plants. It wasn't generally quite as bad, though. I would say there are some breaks even happening now. But what did happen is a big loss of food service, and that's pretty devastating for an industry that relies on heavily on chicken nugget demand and spicy chicken sandwiches, and that actually came back fairly quickly. What didn't come back, though, is a lot more madness, and we're a little bit worried now about football season, and so wing demand is still pretty challenging. Unlike the pork industry, though, the chicken industry was able to cut back fairly quickly. They did make some production cuts, fairly steep production cuts, to kind of right size the industry. But more recently, what we've seen is a return to kind of normal production, and that's a little disheartening. If we think through how much pork we're likely to have as we run these plants sharply in the previous several months, and they have been fairly successful in shifting a lot of product from food service into retail, and probably a little better in some cases than the protein companies that we work with on the animal side. And I think because they were so heavily focused on food service as a point of entry, I think the fact that they were able to shift a lot of that to retail and get it into new packaging, even putting it into value packs and channels it's never been in before, was pretty remarkable. And it does suggest they're a little bit more flexible than some would suspect. I think the other aspect, though, to think through is really what are consumers looking for? In a health challenged environment, a lot of people are looking for immunity boosting products, and I think the plant-based industry is positioning to really provide that. Now, we all know there have been a lot of studies that show plant-based isn't necessarily healthier, but I think despite that, they're doing quite well in selling that health halo to consumers. And this is particularly, this is the time essentially to make sure that people don't forget that. I would tell you that in the long term, I think growth here in the US and abroad will continue to be strong. And the industry needs to remain vigilant in making sure that our message is clear when it comes to plant-based. If you look at the retail protein industry, retail sales, while they surged initially, and we talked about that earlier, and then fell as people essentially had stocked up. What we've seen now is some stabilization. And I think for pork, we're up about 17% year on year in terms of total sales, and 25% for the month. These are great numbers, and without a doubt show strong takeaway. But what's more concerning in my standpoint is just that total volumes are really only up about 3%. So it does mask some of that. We have seen quite a bit of cost inflation, and consumers are buying quite a bit lower volume. That is a concern as we think through how we compete against beef, which has seen similar trends, if not worse, because of the higher costs that have been passed through, and chicken, which, as we know, is going to be plentiful in the coming months. If you look at the trends on the right, food service, we've seen obviously a big surge in a recovery in food service, especially in markets that are further along in the recovery and the removal of shutdown orders, whether that's Australia or Germany. You've seen a big improvement in food service trends there. But what I would tell you that here in the U.S. it's still pretty sluggish. We've seen, as I mentioned, a rapid rebound in fast food, not nearly as good in terms of the breakfast items. We're still working to get some of that business back. The casual and fine dining are coming back even in these areas where we're removing some of the stay-at-home orders. The big unknown at this point is, can these restaurants stay open? I think with some of the developments in the last week, that's still up for grabs. But as we think through the overall demand, I think it is pretty reassuring. On the next slide, I think through kind of how meat is going to be sold going forward. We did see a big shift toward online, and I did see a big improvement in stay-at-home cooking. A lot of my friends, obviously, were talking about new recipes and trying to find new ways to cook meat, many of which the pork board was helpful enough to send over some recipes. But generally, if you think through these trends, I don't think they necessarily go away. I think it makes the work of the pork board and others like them that much more important in terms of making pork more accessible and easy for consumers to buy at the store and then to prepare properly. On the next slide, if we think through on slide 21, when we look through at exports, clearly that was the big story of 2020. We did expect a big year in exports. It delivered so far. I would say that, if you think even a year ago in terms of exports to China, fairly low. We've now been running up, obviously, strongly through the first part of the year with some minor disruptions here lately. It will be interesting to see what China remains as strong in the coming months. But you can see, China now takes up nearly 10% of all U.S. pork. And that's all being sent to one market. So any disruptions, like we saw, in the developments this week with regard to plants being delisted, tied to COVID-related employee outbreaks, not here in the U.S., but in Brazil, the U.K., and Germany, that obviously could have, huge impacts on the overall strength of U.S. markets. If it's true, the logic, the science behind this, it really doesn't hold up. I do think there should be some, based on what we know in terms of China's needs, we should be able to access that market. There is obviously a lot we don't know about China's positioning at the moment, but we are looking for clarity in terms of what will happen with exports in the short run. My view, though, is that given how much pork they do need, and I'll talk about that in a minute, it's likely that we'll continue to ship quite a bit of product in Asia. So, on the next slide, with that overview on U.S. markets, I think it's useful to look at a couple of other. You can see here our outlook for 2020 really hasn't changed. I mean, big picture, we're still very short product, largely on the back of African swine fever, as you all have heard a lot about. We are expecting 2020 production as a whole to be down about 8%. The big question now is, what happens in 2021 given this weakness that we're seeing today? If you think through on slide 25, a big part of the disruption has been in the hog production sector, with the exception of Asia, where you can see hog prices are still very high. And that reflects, again, that shortage of hogs that continues to be felt due to African swine fever. Regulatory burdens have been a massive challenge for the European hog industry, and that's only increasing. I do think, with a few exceptions, they will continue to reduce production in areas like Germany, where that that regulatory burden has become really problematic. In other areas, we've seen ongoing outbreaks of ASF in Poland, very close to the German border, and that remains a challenge. Ultimately, though, it's the sharp drop in demand following the stay-at-home orders that's really going to provide, the most pressure, I think, for the hog industry in Europe and force slower production growth going forward. On slide 27, real briefly, I think, most of these challenges are very similar to what we saw here in the U.S. I think the one exception is food service. Their pork industry just doesn't have as much exposure to food service as we have here in the U.S. Less than 20% on average. Another big challenge is the loss of that summer tourism season, especially if we look through those southern European markets where we should see a pretty sharp decline in Italy and Spain. The other key risk is exports. 71% of Europe's exports went to China in April. And this decision by China to start blocking imports from affected COVID positive employee plants could be devastating for European plants. Most at risk, obviously, are Germany, where we've already seen a big plant delisted. But, if you think through Spain, which is roughly 18% of Chinese imports in total, that's a pretty major risk when it comes to these areas that haven't seen big disruption at their plants thus far. If you look at the next slide, where we've seen the most movement and where we're seeing the growth is in Spain. If you look at countries like the Netherlands, Denmark, and the UK, production was up 3 and 4% at the beginning of the year. We have seen them start to pull back on some of their plans to grow. The other country is obviously Spain, where we continue to see strong growth, and that really reflects the positioning in those export markets. On slide 29, you can see this is just really a continuation of a trend that's been going on for several years. Spain is ideally positioned to export, but they've also done a nice job, I think, modernizing their facilities, and they really don't face that same regulatory burden that you've seen in Germany. And that's a big part of why they continue to gain share in Europe. Switching gears on slide 30 and talking briefly about the outlook for China. And I won't go into too much depth since I know we have another speaker here in a minute. I did want to share, what we're seeing in terms of COVID. Really the impact there has been primarily on the beef and the seafood markets, as they have the most exposure to food service. Pork really hasn't been touched at this point, not heavily in any event. What we have seen is some disruption in terms of rebuilding, some supply chain disruptions early on. But I'll talk about a little bit more about that in a minute. What you can see, though, is with the exception of a few markets, pork really has gone okay. On slide 31, what you can see is that prices really continue to move higher into the spring. They've been a little weaker here, as demand has really suffered. But I think a lot of that was tied to the food service shutdowns that we saw. We've actually seen in the last week or so another rebound higher as these import concerns have really forced a lot of those import companies to limit imports from all countries until they have more visibility around how they're going to, if they have any real risk of further disruption. And real briefly, just in terms of ASF, because we did just update our view, not a lot has changed in terms of our outlook here. Still looking for another 15 to 20% decline in total exports in terms of total production this year. They are stabilizing at some. You can see our outlook for rebuilding in the lower right-hand corner. Vietnam and Philippines, I've also seen big declines. I would say they're having a little tougher time rebuilding, but the magnitude of the losses hasn't been quite as severe. They did, as I mentioned, have a setback in terms of rebuilding with the COVID-related disruption. But generally, they are still on pace to recoup a lot of that overall supply. And as you can see on page 33, a lot of that's been tied to the gilt retention practices that essentially have allowed them to rebuild that breeding herd, obviously with a different set of genetics. So they may have a slower rebuild generally in terms of total production. But as you can see on slide 34, just a lot of consolidation, a lot of movement out of those smaller farms and into larger facilities that can maintain that biosecure facility, a big shift toward better animal diets, and that will affect their ability to rebuild and how quickly they can get back to kind of normal pork production in China. If you can see on 35, we don't expect them to stop importing. You can see there's been a huge surge here in terms of total imports, especially from the U.S., which is now the largest exporter to China. But what we do see is a decline over the next few years in terms of total imports. They have obviously quintupled their exposure to imported pork. It was just 2% of their total supply and is now 10%. I do think that there is room for imported products to maintain a fairly sizable chunk of that market going forward. And then real briefly on slide 36, ASF is not only an issue, as we can see in China, but is also continuing to break in parts of Europe. Another outbreak this week, very close to Germany. I would say that it is interesting that there have been more cases this year as of May than all of 2019. It continues to be a major concern, obviously, for producers in Germany. But what I also can tell you is that the Germany's worked pretty hard to move toward a regionalization program with China. Now, they haven't signed anything that I know of for certain yet, but I do see that as highly likely, and that could likely limit the trade impact on should there be any ASF in Germany in the short run. So turning to slide 37, there are a lot of trade issues out there. I won't have time today to speak to many of them. You can see on page 38 our expectations around trade disruption and how severe the worst case is in terms of total shipments. On page 39, you can see just a few of the key constraints or concerns that we have in terms of exports. Obviously, with the strength in the U.S. dollar and the weakness in the Brazilian real, that we're working at a modest disadvantage there. I think it's reassuring, as I've just outlined, that Asia generally remains very short of pork. And with the exception of this latest trade kind of disruption, those markets remain accessible and have been strong markets for U.S. product. There are no shortage of issues. Obviously, foreign animal diseases remain kind of top of mind. But as I see it, trade should be a big part of the pork outlook going forward. So on the next page, when I step back and think through kind of where we are in terms of the global pork picture, if I think through kind of the near-term disruption from COVID and the economic weakness that's likely to come as a result, I think it is generally a net negative for the industry. But at the same time, we look at those shortages of pork in Asia and just how much they're going to rely on imported product, especially over the next few years, how much they've been delayed in terms of rebuilding, and just how strong demand has been for pork generally, not just in Asia, but throughout the U.S., and I'm fairly optimistic. So not to take no position, but I'd say there are a lot of factors that could influence the outlook here. if I look at page 41, clearly, if I think through how this could all unfold, I would say there are a number of puts and takes. Labor challenges at the plants are going to remain an issue, as is absenteeism. I am worried about the large kills this summer and how many challenges that could create. I think in terms of getting these carcasses, getting the full value out, I spent some time here talking about China and Asia and how much, the ongoing shortage of product that we see there. But it's also Europe and Latin America and how COVID will impact their overall supplies that will determine a lot of whether or not U.S. product finds a home into some of these export markets. Again, with 10% of our exports going to China, 10% of our overall production going to China, that is a major concern as we look forward. So finally, what does that mean for you? What does that mean for the overall pork industry? Well, as I think about it, managing your balance sheet and maintaining liquidity are key. Speaking as a banker, I think that's probably not a big surprise. I do see though some opportunities for the industry. I do think there's an opportunity to really get out and work with consumers, make sure that they value the product and the pork that you're providing. There has been some change in the supply chain, and we need to make sure that we as an industry are able to provide products that work with that consumer, today's consumer, in the new reality that we're all living in. I would say that staying nimble in global trade market, in global markets, is going to be key. I think the industry has always valued export opportunities. But now more than ever, we're going to need to be able to work with our export partners to make sure that we're moving product into those channels, especially given how important that market has become. And then finally, all of this is kind of underpinned with trust. Over the last several months, obviously this has taken some abuse, but it can be restored, with the hard work of all of you and our leadership in the pork industry. And finally, that's really all I've got. I thank you, I guess, for your attention. I apologize for the technology issues earlier, but if for any reason you don't get your question answered today, I put my email here. You can reach out to me on LinkedIn. I truly value my relationship with the entire industry and really enjoy exchanging ideas with many of you.